On the call this morning, European debt woes extend a global sell-off with Asian markets down 2% and Europe down 0.5% as the Greek Prime Minister calls for a vote of confidence amid violent protests over austerity measures that are needed to secure a bailout. U.S. futures are slightly negative on mixed earnings and a disappointing outlook from Finistar down 17%, while investors look to U.S. jobless claims and housing numbers to stabilize markets. I'm Deborah Borchardt, and the morning call starts right now.
Chief Strategic Officer with T3Live.com.
And I'm Deborah Borchardt, and this is the Morning Call. So yesterday we saw this market just get routed. We had the Empire Manufacturing come out, and it was down 7.8%, much weaker than expected. This made the market get really worried about the ISM that's coming up. So we saw that we gapped down on that number. And looking at the market, we're down 7.5% since May. This is really an unchanged market since the beginning of the year. So if you've been sitting on your hands, you haven't been making any money, so you got to listen to this call so you learn how to trade and make some money. Let's talk about the SPYs, Scott, because that's really what people are looking at with this market.
Yes, well, yesterday we talked about whether or not Tuesday's rally would stick and can we build on it, and what we use is our retracement rules. What we like to do is measure the move by seeing how much commitment you have to it. So we talked about, will we keep 50% of those gains? Will the gap hold? And you know what? They made it really easy for us because pre-market yesterday, once those numbers hit, they sliced through the gap and they took back more than half, almost a full gain on the open. So that let any bull say, you know what, I better be on the defensive. If I have some positions, I better lighten up. I better salvage the trade because we could see a lot lower prices. And if you look here on the S&Ps, let's show some key supports that we're going to be coming into today. You know, I like to show you, let's start off with the spiders because a lot of people have been trading them. This was that descending channel. You know, this is what I was talking about yesterday here. This was the Tuesday move. We talked about this resistance, didn't even get tested. Then on the open, we sliced the gap, taking away any bullish pressure you had, and then we just gave back the whole move, and now, you know, we're on the lows, and the next level we're going to be watching here is that Japanese crisis low, which comes in at around 125.28, and the 200-day moving average, which now stands anywhere around 125.50, all depending whether you use the EMA or the SMA, so I like to put it as a zone.
Let's talk about those Qs. Those Qs broke through their 200-day SMA. How about that?
Well, some indices actually got to their 200-day before the S&Ps, so they had that bounce on Tuesday. What you had to do is measure that, measure the volume, which there was none. There was no potent action. So now that they had their feeble bounce, which usually we do first, now they could break through. So this could be very scary here. If the S&Ps don't hold their 200-day, you know, these Qs are going to break through theirs. And, you know, they tried to hold it right here. Next level down is this 53.83. We'll have to see how we handle that area.
Well, let's talk about the S&P 500s because we've got key levels at that 1240, 1250 mark. So if we can hold that, that's great. But if we break that, where are we going?
Well, that's the whole thing. You know, that's why you have to have levels mapped out. And as far as the S&Ps, I do believe we're going to get some kind of action in this 1249 to 1255 area. Maybe it pushes down to 1240. What I'm going to look for is some type of reversal where it pushes below midday. Then you see some leaders starting to act better. You see some support where they can't push the market lower. And we get some type of reversal here to finally get some relief. But if that doesn't happen, like yesterday, the indices were so down, leaders were down, banks were down, everything was down. So that's when we spoke yesterday. I'm like, we're probably not going to rally today because I could see nothing that could support it. So you need to see some groups be able to support a rally. So you have to coordinate that with that level in the S&Ps. Otherwise, we could see a lot lower prices, especially over the summer.
Well, I think that that's really key, Scott, because what I saw was that last April's high on the S&P was at 1216 to 1222. That's pretty far down there. So let's talk